Hello, my name is Nurshahada binti Muhammad Fadli and I will explain about Article 1, a comparative analysis of the financial ratios of the listed firm belonging to the education subsector in the Philippines for the years 2009 till 2011.
Hi, my name is Nur Fatiha binti Abdullah and I'm going to explain the Article 2. In the introduction of financial analysis, clients say that financial analysis evaluates organizations, programs, budgets, and other financial operations. Financial analysis determines if a company is strong, solvent, liquid, or profitable enough to invest in. Financial statement analysis examines the relationships between the balance sheet's elements using accounting ratios, asset utilization, profitability, leverage, liquidity, and market value factors are included. Financial analysis focuses on statistics and the link in financial accounts. The review of financial statements helps you understand how the different elements of financial statements relate to each other and the company's performance. Moreover, according to Keller, financial statement analysis involves selecting, assessing, and understanding financial facts to make the investment and financial decisions. It's also the process of determining a company's financial strengths and weakness by assessing the balance sheet and profit or loss. Financial statements can be assessed using ratios. Therefore, Swanson states that most financial statements are extensive, so it's smarter to pick out the important numbers and plug them into formulas devised by finance and accounting scholars.
Ratios are based must be prepared in accordance with the same set of accounting rules in order for their interpretation to be fair. This makes sure that general ledger accounts that underline the financial statement always refer to the same line items, 6 key areas where financial ratio analysis is typically applied, which is profitability, coverage efficiency, market prospect, liquidity, and solvency. This research paper will use liquidity ratio, activity ratio, leverage ratio, profitability ratio, and market value ratios to look at the financial statement of these three companies for 2009, 2010, and 2011. This research paper tests a comparative approach and tries to come up with benchmark number that will help other firms in the education subsector that are not publicity traded. For each financial ratio, the company that was judged to dump and ratio trend got 3 points, the next one got 2 points, and the last one got 1 point. There are 3 Philippines education subsectors in this research. There are Central Escolar University, Far Eastern University, and iPeople Incorporation, or known as Malayan College.
In the introduction of Article 2, most analyses of financial statements look at companies in industries that have a big impact on the economy or that operate in a very competitive business environment. The goal of this paper is to do an analysis of how well a company has used rules to make sure its final performance is good and right. This study looks at how well the India's commercial banking industry did from April 2011 to March 2014. Databases like CMIE, ProWest, Money Control, and Yahoo Finance were used to find the financial statements of Axis Bank, ICICI Bank, Federal Bank, and HDFC Bank for the given time periods. The financial ratios for the 4-year period were calculated using the summary of the information needed from these financial statements. Financial ratios are used to compare how well 4 of the biggest commercial banks in India do in terms of making money, having enough cash on hand, and not going bankrupt. The study will use liquidity ratios, activity ratios, leverage ratios, profitability ratios, and market value ratios to look at the financial statements of these banks. For the purpose of measuring liquidity, either the current ratio, quick ratio, or acid test ratio was utilized. Inventory turnover, debtor turnover, and working capital turnover were used to measure activity. The debt ratio, the equity ratio, and the interest coverage ratio were used to figure out how much leverage a company had. Profit margin, net profit margin, return on assets, return on shareholders' equity, and earnings per share were used to figure out how profitable a business was. Price-earning ratios and earnings per share ratios were used to figure out the market value. There are four Indian banking sectors, which are Axis Bank Limited. The second one is Housing Development Financing Corporation Bank, also known as HDFC. The third one is Federal Bank Limited, also known as FBL. And lastly, Industrial Credit Investment Corporation of India, also known as ICICI.
Objective Article 1. First, to analyze the financial statement of Central Escolar University, Far Eastern University and I-People University for period 2009 until 2011 using comparative financial ratios. Second, to determine the liquidity, activity, leverage, profitability and market value ratios of three universities. Third, to determine norms, industrial figures and peculiarities of the education subsector of the Philippines.
The objectives are to determine the liquidity, activity, leverage, profitability, and market value ratios of Axis, ICICI, HDFC, and Federal Bank. Second one is to determine norms, industry figures, and peculiarities of the Indian banking sector. The third one is to find comparative financial analysis among these banking companies. And lastly, to evaluate financial performance using DuPont analysis.
The three university data were collected by the researcher as part of the study process from the website of the Philippine Stock Exchange. Summing up all the points up in terms of liquidity, Far Eastern University get a total of 11 points, followed by Malayan with 10 points and Central Escolar with 9 points. In terms of activity ratios, Far Eastern come out of top in terms of activity with a total of 9 points, followed by Central Escolar University with 8 points and Malayan with 7 points. In terms of leverage, Malayan get a total of 8 points, followed by Central Escolar University with 7 points and Far Eastern University with 3 points. In terms of profitability, Far Eastern get a total of 14 points, followed by Malayan with 11 points and Central Escolar with 5 points. In terms of market value, Central Escolar and Far Eastern both get a total of 7 points, while Malayan University get a total of 4 points. Following a thorough review of financial ratio, Far Eastern University get 44 points, came up of the top and the most financial viable institution, followed by Malayan University 40 points, then Central Escolar with 36 points.
In the methodology of Article 2, the first part is descriptive statistics. These financial ratios are obtained from the Axis, ICICI, HDFC, and Federal Bank. Next, the second part is tabulations of each ratios obtained into line chart. The ratios that calculated are liquidity, profitability, activity, assets turnover, and leverage ratio. Lastly, after conducting a comprehensive financial ratio analysis of these four banks, Federal Bank has the best price-earning ratio among these banks, and therefore, it is inferred that Federal Bank is the most financially stable in comparison to others. In the summary of introduction of Article 1 and 2, in Article 1, most analysis of financial statements focuses on companies in industries that have a big impact on the economy or that operate in a very competitive business environment. In the Philippines, only 3 companies in the education subsectors are listed. These are Central Escolar University, also known as CEU, Far Eastern University, also known as FEU, and lastly, the Malayan colleges. Financial statements of CEU, FEU, and Malayan for the given time periods were taken from the Philippine Stock Exchange website, also known as PSE. Meanwhile, in Article 2, the goal of this research is to do an analysis of how well a company has used rules to make sure its financial performance is good and right. The financial ratios for the 4-year period were calculated using a summary of the information needed from these financial statements. Databases like CMIE, Prowess, Money Control, and Yahoo Finance were used to find the financial statements of Axis Bank, ICICI Bank, Federal Bank, and HDFC Bank. Both articles use liquidity ratios, activity ratios, leverage ratios, and profitability ratios to look at the financial statements of these respective companies.
Based on the methodology used in Article 1 and Article 2, the researcher used financial ratios analysis. There are some similarities between the two articles. For Article 1, the context and design of the research work and exploratory and quantitative. It is exploratory in that researcher was unable to locate published material that used financial ratios to discuss standard statistics from the industry and anomalies in the education sector. More specifically, it is a quantitative study, is that it seeks to derive conclusion from the financial data that has been obtained, combined, and processed. For Article 2, the study used comparable financial ratios to evaluate the financial performance of Indian banking industry from April 2011 to March 2014, including Axis, ICC, HDFC, and Federal Bank. Provost and the researcher used Provost and the company website to collect the audited financial statement of Indian banking organization for the 4 fiscal years. As part of the study process, the financial statement were used to create the financial data required for financial ratios. In order to create comparative financial ratios for use in the analysis stage, then were the compiled and processes. For conclusion, financial ratios are method for evaluating a company's relative strength by making quick calculation on components of the income statement, balance sheet, and cash flow statement. In contrast to raw financial data, ratios measure a company's operation effectiveness, liquidity, stability, and profitability and provide investors with more pertinent information. The frequently used and properly essential approach of ratio analysis can help investors and analysts acquire profitable advantage in the stock market.